Hey everyone, and welcome. Thank you for joining us for today's Meet the Analyst webinar, Retail Media 2022, What's Next for Digital Advertising's Third Big Wave. I'm your host, Blake Drosch, eMarketer Analyst at Insider Intelligence in New York City, and I'm joined by my colleague, Andrew Lipsman, Principal Analyst in Chicago. Hey Andrew, it's great to have you here.
Hey Blake, great to be with you.
Before we get into the main presentation, I'd like to thank Google for making today's webinar possible. We'll be hearing later on from Jennifer Presser-Kroll, Retail Partnerships Lead at Google. She's also joining us from New York. Hey Jennifer, how's it going?
Hi Blake, great to be here as well.
A few things before we dive in. We've got a ton of information to share, but there's no need to take notes. We'll email you a link to view the slides and the full recording, but we do want you to participate. Just use the window on the lower right-hand side of your screen to submit questions at any time during the presentation. We'll get to as many as we can during the Q&A later on. So with that, Andrew, let's get started. What's on the agenda today?
Thanks, Blake. All right, so we're going to kick it off today by talking about digital advertising's third big wave. This is kind of a state of retail media today. Then we're going to unpack what's happening with the rise of retail media networks. Dozens have come into the market in the last couple of years. We'll talk a bit about that. Then we'll talk about brand budgets as they shift to retail media and how they're doing that. Then we'll talk about some challenges and opportunities with an eye towards what's next for retail media. So with that, let's jump right in. So digital advertising's third big wave. Why do I call it the third big wave? I think that as we go back to the early years of digital advertising budgets starting to come online, it really began with search. Google, obviously a big player in this, brought those dollars online for the first time, thinking back to kind of the early 2000s. So that decade of like 2000 to 2010, that was really the search era of digital advertising. And then we started to see a shift in 2010, which I'll call more of the social era, where a lot of the new growth was coming from social. And then as we think about this next decade, the 2020s, I really see this as the emergence of retail media as that third big wave. By the way, all of these areas continue to grow and grow significantly, and they just keep building on each other, which is why you see this curve, which is a fairly exponential growth curve for digital advertising. So let's talk about why I think retail media is the third wave. There are a lot of different drivers. The first one, I think we have to start the conversation with first-party data. And it's not just any first-party data, it's first-party data built around consumer buying and shopping behavior, purchases. This is really, among the most valuable first-party data there is. So that's kind of the fuel for this whole ecosystem. The second is closed-loop attribution. I think measurement is really an important driver of digital ad budgets. And the fact is that we have closed loop attribution built into retail media in a way where ads are delivered in context in retail environments, and that exposure can easily be linked to purchases. So brands know if those ads are performing and if they should be increasing their investment. Next, it's contextually relevant ads. This can sometimes go overlooked, but delivering an ad at the moment of truth, when people are actually in consideration and making those buying decisions, is among the highest impact ad units you can possibly have. So I think that's another key aspect of this. Retail media environments. A lot of e-commerce websites and other DSPs that they're plugging into are delivering audiences at scale, tens of millions, and in many cases, hundreds of millions of people. So these are real audiences. Lastly, full funnel campaigns. Retail media today has focused a lot on the search component, so it's really performance driven, but branding is becoming a much bigger part of the equation. Another key aspect of retail media is that it fills a huge need for brands. I think it sits at the intersection of three massive marketing and commerce disruptions that are happening today. The first one I'll talk about is TV. So we've seen, linear TV ratings in decline over the better part of the last decade. There's less and less inventory, but that market's been pretty stubborn. It's stuck at about $70 billion a year. So you have the same dollars chasing less inventory, which means the prices are going up quite a bit. Brands don't really have better places for that to go. And as they do, I think those dollars will start to flow into different places. Second is in digital advertising, we've seen the deprecation of third-party identifiers, cookies, and mobile ad IDs. So that's also caused some flux in terms of the needs for data, and obviously has presented an opportunity for more first-party data. The last one, and I'd say we're very early innings here, but this in-store piece, a big trend that is just maybe in inning 1 or 2 is the digitization of the store. We're going to see a lot more consumer data enter the store environment, and that's going to create new applications, new media environments with in-store digital media. And so I think retail media just sits at the center of all of these opportunities. And so that's one of the big reasons why I'm very bullish on it. So what does our specific forecast say? We came out with our first ever retail media forecast late last year. And what you'll see is in 2020 and 2021, we actually had growth rates of over 50%, 2 consecutive years. And we're now at a $31 billion market. The growth rates do start to come down a bit to 31% next year. But what I will say is that this is off a much bigger base. So if you actually look into 2022 and 2023, it's an incremental $10 billion in new spending that we expect to come into this market over the next 2 years. Huge opportunity, lots of money up for grabs. By the end of that time period, retail media should account for about 1 in 5 digital ad dollars. Another key driver of this market is simply e-commerce. I mean, you can draw a pretty direct line from e-commerce spending right into retail media. And obviously, it's to nobody's surprise, we've seen a huge increase in e-commerce spending, particularly coming out of the pandemic. 2022 is actually going to see the first ever $1 trillion year for US e-commerce. But it doesn't stop there. Play it out a few more years into the future, and you can see that advertising will grow by another about $550 billion by 2025. So all of that inflow of e-commerce spending is going to have follow-on effects in terms of how it's going to drive demand for digital ad dollars. So where is the growth in retail media coming from? And I think it's instructive to look at a comparison with search and social, which are more mature markets at this point. So first off, every single one of these digital ad markets has seen tremendous growth over the past year in the 30–40% range in many cases. With search and social, because it's more mature, you see that a lot of those increases are coming from the demand side, that there are a lot of dollars chasing this e-commerce spending, but there's not as much growth in the inventory available or the number of clicks that are driving those increases. Retail media, it's actually a pretty equal balance between more inventory and increase in pricing coming from demand. So that is predictive of the progression that we expect to see over the coming years. All right, let's talk a bit about the rise of retail media networks. So as I mentioned, dozens and dozens have come into the market over the last couple of years. And I like to classify them into a few different classifications. The first one is digital marketplaces. These are some of the earliest retail media networks and most mature in a lot of ways. You can count eBay, Amazon, and Etsy among them. The next one is mass merch retailers, which are selling across categories, though CPG and grocery is a huge component there. Costco, Walmart, Target are all examples of that. Then you have some of your more category-focused retailers, many of them industry leaders. So Best Buy, Home Depot, Lowe's, and Kroger are really good examples of those ones that have built networks. And then we have this kind of new crop, I would say, that are commerce intermediaries or delivery providers, counting Instacart, Uber, DoorDash, and more recently, GoPuff among them. So a lot of the biggest, most prominent retail media networks today begin with scale, right? You have to have an audience. Most advertisers want to reach an audience. And so it's no surprise if you look at this top 10 list of the top digital retailers by traffic, almost every one of them is one of the key players in retail media today. The only exception really is Apple. I think they're an exception in a lot of different ways, but the other 9 are all key players in this market. So that traffic, that audience allows them to be players in this space. Not every retailer will have a lot of traffic, and so I think there are implications that will come out of that. Okay, so this slide I'm going to take a little while to unpack because this is kind of my way of understanding the retail media network market. And it is, I will say at the outset, very much an oversimplification to help understand how retail media networks can get to scaled digital ad businesses. We're looking at two dimensions that are critical to scaling offerings. The first one being traffic, and this is specifically online traffic. I think there's a whole other side conversation because many of these retailers have huge offline traffic that represents an opportunity. The second is third-party marketplace dynamics, where you have independent brands and sellers also selling through these retailer channels. The retailers are then mapped according to their traffic, which is informed by that Comscore data, and then also my own kind of qualitative interpretation of the third-party marketplace offerings. So let me first direct you to the top right corner, where you'll see a number of the leading retail media networks today. All of them have clear marketplace dynamics, or among the top 10 in traffic: Amazon, eBay, Etsy, Wayfair, Walmart. I think no surprise there that they're currently among the leaders. In the top left and bottom right quadrants, you have a handful of players with strong or relatively high potential offerings, where they may be able to build by themselves, or they also may need to partner. So an example of this need to partner with some strong offerings would be Best Buy and Target. They're some of the early players to the game, but you may have noticed in the past year, each of them has partnered with Criteo and CitrusAd as technology partners. Now, in the bottom left quadrant, this is really where most retailers are going to reside, most retail media networks. If they have marketplace offerings at all, I think you'd probably describe them as more nascent offerings. And so a lot of these really will probably need to partner in some way in order to bring those businesses to scale. Highly differentiated offerings, and a lot of these do have some really interesting differentiating factors, may have a faster path to scale. So it's not like this is, you have to only partner to get to scale. One good example here would be Kroger. Kroger has some unique differentiators. They're powered by 8451, so they have really strong first-party data orientation, attribution with their loyalty card data, nation's largest grocer. So I think that Kroger very smartly also recognized that they had a need for a marketplace. And in 2020, they actually launched one. At the time, I was kind of like, that's interesting that Kroger would be launching a marketplace. They're doing so with help from Miracle, which a number of other retailers are now doing as well. But more recently, they also partnered with Bed Bath & Beyond. Maybe there's potential here to partner because they have complementary product offerings where 1 + 1 = 3. There's some adjacency there. One last bit of potential partnership, I will say, that kind of caught my eye. There was some recent news where Instacart's CEO, Fidji Simo, just joined the board of Shopify. So you could almost look at these companies as competitors in retail media, but maybe they're looking at each other more as complements or as partners. So I think we're going to see a lot of this over the course of the next year, where there's just all sorts of interesting partnerships and dynamics that are happening, where all these offerings kind of figure out what's going to help them establish the best position and attract as many brands as possible.
Quick question there, Andrew. There's also been a lot of talk about quick commerce. I see you've got GoPuff on there. In regards to retail media, given the emphasis that you're placing on building a really robust marketplace, could that be a potential challenge for a company like GoPuff that focuses on delivery speed over assortment when it comes to potentially scaling a retail media business?
Absolutely. That could be a challenge. I will say, traffic right now, because they're newer, is lower, but that could certainly move up on this quadrant. But I think they're taking a differentiated approach. So that's what you should be doing if maybe you're inhibited in other ways. One thing that they're doing that I really like is they seem to be leaning into product sampling. For CPG, I think that's a really interesting opportunity. I think we'll see more of that. So that's something that I'm kind of bullish on, and I like their approach to go to market in that regard. All right, so let's talk about brand budgets shifting to retail media. So first off, it's helped by the fact that digital advertising generally is growing strongly. If you look across all of these advertiser categories, they're all growing double digits this year, according to our latest forecast. But the two biggest ones are CPG and consumer products, which will grow about 18%, and then retail specifically 20%. So both of those, really will flow kind of directly into retail media in a lot of ways. Retail media continues to carve out a larger part of brand and media budgets. Specifically, this IAB data shows that progression over the last few years from 16 to 21 to 25% in 2021. So expect that trend to continue. Where are the budgets coming from? This is, I think, a subject of a lot of debate. This Merkle study shows brand media and e-commerce media have been predominantly the top two funding sources, and certainly those are growing as funding sources for retail media in general. But the big news of the past year is that we saw a big unlock in shopper and trade dollars, which traditionally sit, mostly offline. That's drawing nearly even with the brand and e-commerce dollars. So I think that's a big trend to watch. And it may only be getting started. That's a huge pot of spending that exists, as I said, predominantly offline today. There's still a ton of upside for retail media to grab budgets. Here, we're looking at retail media networks stacked against a bunch of different other marketing channels. And brands said how much of their budget goes to each one, 0%, 1 to 9, et cetera. And what you'll see is that retail media networks are at the top for 0%, right? So a lot of brands haven't invested there at all. So it shows just how much it's an emerging space. There's also potential not just to move that 0, but to move those budgets, that are in the 1 to 9% range into something higher. So I think we'll continue to see more getting on board and more investment from those who already are investing in retail media. Another big opportunity is non-endemic brands, right? So early days of retail media was basically sellers on different marketplaces or channels. They wanted to advertise against where they're being sold. That makes a ton of sense. But as we mentioned, this first-party data is critically important. And so non-endemic brands are starting to realize, and when I say non-endemics, that would be things like auto manufacturers, that would be financial services, huge advertiser categories, who want to make use of data to reach the right audiences, those who might be in market. So a couple of examples there. I mean, if you think about being able to understand people's shopping and purchase behavior, you may be able to tell segments of consumers who maybe just had a new baby, or maybe they're on their second or third baby. If you're an auto manufacturer, you may want to deliver minivan ads, right? Or if you're in insurance, maybe life insurance, it's the right time to reach that consumer. So there's all sorts of applications like this, but I think non-endemics are starting to see the opportunity. And this research shows that they went in just 1 year from about 19% of them basically having not considered retail media networks to 4%. So they're almost all getting off the sidelines at this point.
Andrew, as non-endemic brands increase their spend, could this sort of tip the scales, if you will, on the importance of having a strong marketplace like you talked about, but also shifting a little bit more towards the value of first-party data? And if so, what are the types of players that are poised to sort of gain an upper hand here in given that shift?
Yeah, so first-party data, it makes it critically important. And I would say, retail media networks that have more of a 360-degree view of the consumer are areas of interest. So if you're selling across categories, you probably know more about that consumer and their household habits. That can better inform some of those strategies. So I would say that's probably the place I would start in terms of those opportunities. But there's certainly opportunities across the board. So one thing that these non-endemics are doing is, they're not just buying search ads on a retail media platform. They're thinking brand advertising. And the way that they're doing that is moving up the funnel with display and video ads. And in many cases, they have to do this through DSPs. So here we're seeing some of the top DSPs and how they're playing this market. So Google DV360, obviously at this point, most retailers are plugged into that. Amazon DSP is another key player. It is in and of itself a retailer. The Trade Desk, another key one. They just recently partnered with Walmart on some combined offerings. And then Verizon Media, now Yahoo DSP, they're actually taking a slightly different tack, but they're focusing on digital out of home in physical retail environments. So there's a play for kind of all of these DSP offerings to help move retail media into the upper funnel. Let's talk now about retail media challenges and opportunities. So I think there's a lot of challenges that are going to create a ton of opportunity over the next couple of years. I'm personally really excited to see all the innovation that's going to come from this. So the first challenge is just overall the channel shift, right? We've gone through in the past 2 years a huge unexpected channel shift, or at least how quickly it happened into digital and digital commerce. And I think that's creating a lot of challenges for both retailers and brands. For retailers specifically, every incremental dollar that migrates to digital can be a drag on profits because of delivery costs and things of that nature. It's often less profitable than their in-store channels. For brands, there's just increasing fragmentation where you can't at this point avoid e-commerce as a key channel. Even for CPG, which has been one of the slowest to migrate online, now depending on the segment, 5, 10, 15% of dollars are digital. So I think this creates a lot of challenges. The opportunity that I really see here is for first-party omni-channel data and attribution to really, I think, help address these needs that are happening with retailers and brands. That can unlock a lot of future spend. The second challenge is retail media network overload, right? So there's dozens and dozens of networks. Brands now are encountering having to use a lot of different platforms. And you can see that about half of them are using 3 or more retail media networks today. But you also see that there's kind of a sweet spot at 2 or 3, right? Oftentimes it gets hard to manage once you get beyond that third platform in a given space. At the same time that this is going on, we have other research from advertiser perception showing that brands expect to have to significantly ramp up their DSP usage from about 3 in 2021 to almost 6 in 2022. So there's platform overload and it gets harder and harder to manage. For retailers, a key challenge is just they have to compete for mind share and those brand budgets. Even if you have the best possible offering, right, you're competing against everyone else who may be playing in the same segment. And then brands just have way too many platforms to manage for a lot of their media buy. So I think there's opportunity here for partnership, aggregation, consolidation, all these things that will just kind of help simplify this overload. Challenge 3 is churn. So it's hard for retail media networks, especially as newer offerings, to remain sticky with brand buyers. If you look off to the right here, there's a lot of different digital ad buying platforms, but I've highlighted the ones that are pretty explicitly in the retail media segment. And what you'll notice, I think if you kind of look at this list from maybe eBay down, is that the numbers are typically higher in the number of brands who have used but are not currently using versus currently using, right? So they're trying them all out, but only certain ones are staying sticky. And again, not because they're not meeting their demands, it's just they're competing with a lot of different offerings at the same time. So the challenge for retailers is they need to differentiate their value proposition. And also, I think get in the hamster wheel of continuing innovation just to try and retain brands. The brands, obviously, there's a ton of sunk cost in time and resources because they're constantly in evaluation mode and management mode for these platforms. So I think here there's a big opportunity for campaign automation where you can set it and forget it. It allows you to kind of play ball on more platforms, but not have to be hands on keyboard all the time. Challenge 4 is ease of use. I've been hearing a lot of this with so many platforms. It makes sense that you just want the platforms that you do use to be easy to work with. We saw the biggest increase over the past year across a lot of components of being easy to work with. So easy to work with went from 38% to 61% as a key feature that advertisers want in the retail media network. Huge jump there. Managed service options jumped from 33 to 50%, and then self-service options jumped from 24 to 30%. So clearly advertisers are saying we want help. The challenge for retailers, though, is that for ad platforms and media buying, user experience, this is not really a core competency, and also providing customer service for these sorts of things. It's just not their core business. The challenge for brands is that they need more self-serve capabilities, stronger customer service. So there's currently a bit of a mismatch there. Here is an opportunity for white label providers I think, to step in and help ease the burden on some of those aspects. Lastly, challenge number 5 is around ad experience. I will say this one, I don't see this as a challenge today, but it's one I want to point everyone to for the future, because I think it will be a growing issue over time. Retail media ads currently, we've seen a number of studies that show that they're actually pretty well tolerated, probably because it's a newer channel and the ad loads are generally not too much. Here we're looking at some of the leading retail media networks. You can see Amazon maybe is the most mature, has higher ad loads. So that's one where they may need to start watching out a bit more for how many ads are being delivered. But I think this is something to be really cognizant of. And in this context, I think it's particularly important because ad revenue, which retailers want, could come at the expense of customer experience. And you just want to make sure in this environment that you're not ultimately alienating a customer. So just be careful, proceed with caution, I would say. For brands, this creates a really competitive dynamic where oftentimes you feel like you just have to keep spending just to stay competitive, to maintain your presence on the digital shelf. Here's an opportunity, I think, for ad innovation. So thinking about new formats, not just only playing in the search aspect of retail media, and maybe moving into new media channels that are starting to emerge, like connected TV or even in-store digital media. So wrapping up, what's next for retail media? So key opportunities as I look out to 2022 that I think are going to happen. So the first is that retail media is going to continue its progression, moving up the funnel, more display and video ads online, but particularly into CTV. CTV, we're seeing the availability of more ad-supported inventory. And I think as that reaches scale and brands can invest more heavily in this opportunity, fueled by retail media first-party data, they can find this very powerful. The second is that offline attribution piece, right? That 85% of sales that are still happening in stores, that's largely being under leveraged today for targeting and closed loop reporting. So I think if we can bring that piece in and make it more real time and provide a tighter feedback loop, that can really put the value of closed loop reporting on steroids, and I think start to bring a lot more offline budgets online. Third is in-store digital media. I've mentioned that a couple of times. I think we're going to start to see more instances of this entering retail environments, and it's going to start to carve out a piece of this retail media mix. And it's a key piece on the path to purchase. And then lastly, again, the name of the game this year, it's the year of retail media networks. There's so many of them out there, but how do they get to scale and build really profitable ad businesses? They're going to have to be creative, and they're going to have to look in many cases to things like consolidation, aggregation, and partnerships in order to do that. And with that, that's the end of my content. I'll kick it back to you, Blake.
Wow, that was really great. Thanks so much, Andrew. Before we get to your questions live now, we're going to be joined by Jennifer Presser-Kroll, who is the retail partnerships lead at Google. Welcome, Jenny. Thanks so much for being here. Tell us what you're going to be talking about today.
Hi, Blake. Thank you so much for having me, and thank you for that great introduction. I'm really excited to be here. I've been talking with retailers for years about this retail media opportunity, and today I'm going to talk a bit with all of you about some of the key conversations we're currently having with our partners here at Google, and why it's becoming clearer than ever before that for commerce companies, the time for digital ads is now. So let's dive right in. All right. If the first wave of retail media saw early adopters with Amazon, Walmart, eBay, and Target, and this is actually a chart from eMarketer from 2019. And in the second wave, we saw retail media go mainstream with an influx of network launches and trade articles on the opportunity, some of which you can see here. We really see this third wave as the period of sophistication and scale. So as Andrew just said, 2022, the year of retail media networks. And again, that's why we think for e-commerce companies, the time is really now to get this right. So as we shift into this third wave with our partners, the conversations that we're having are shifting from should we to how should we with our partners. And as they look to refine their strategies and evolve their offerings in 2022, we're seeing a few common priorities moving to the top of their list. So first, they want to make their first-party data work harder for them. Second, they want to deepen advertiser relationships. They also want to drive efficiency, and they want to be seen as that industry leader in this space. So we're diving into each of these goals with our partners in order to meet their Wave 3 goals. So to get into first-party data, to make their first-party data work harder, we're continuously developing and sharing new tools with our partners so they can better analyze and activate their audience segments. It's no secret that the digital advertising ecosystem is evolving. And at the center of that change is, of course, user privacy. The way that publishers, advertisers, and technology partners handle and activate user data is being reconsidered and reimagined to more effectively protect people's personal information online. And we continue to develop and share features that empower our partners with the data and identity tools they need to prepare and grow their businesses in this new wave. In order to deepen their advertiser relationships, we're making it easier for our partners to maintain the direct relationships they want and that are important for their businesses, but also be able to scale and use that first-party data, and also, of course, while protecting user privacy. We're talking to them about packaging and reporting on their audience segments in new and compelling ways, allowing them to have a better understanding of their unique reach across their broader media network. We're also helping them enhance that data even further, enabling the combination of their first-party data with their buyers' first-party data, again, all in a privacy-safe way. We heard a bit about driving efficiency from Andrew, and to help our partners drive that efficiency, we're helping them leverage easy-to-use, scalable tools so they can streamline campaign management, reduce their manual workload, and of course, ultimately book more campaigns. And to support our partners as those industry leaders, we're keeping them up to date, bringing them the latest information on new high-impact formats, as well as guiding them through the advanced reporting capabilities, as well as campaign management, possible with an integrated ad tech stack. So as we move into this third era, no matter where you are on your retail media journey, we encourage you to explore these 4 key takeaways. The first is that a privacy-first, first-party data activation strategy has always been key to retail media, but is becoming especially important in this third wave. With that, you want to make sure that you're demonstrating unique audience value and what really sets you apart in terms of why brands should buy from your retail media network. As we move into the third wave as well, we're looking to help partners scale, and it's important to think about whether you should utilize technology partners to help you in that journey. And finally, always experiment, and including with some innovative formats that are coming to market. So to learn more about how Google is helping commerce companies with their retail media networks, please visit the link shown in this webinar. There you'll find cases and case studies from our current retail media partners. And as always, please feel free to reach out to your Google rep to discuss more if you do have one. If you don't have a rep, there's a second link in this webinar that you can click to contact us as well. We'll also send all of this information as a follow-up. So if now is not a good time to click or you can't find the links, don't worry about it. You will get that info as well. And with that, I'll go ahead and turn it back to Blake for audience Q&A. I, for one, am excited to hear more, not only from all of you, but also from our eMarketer expert, Andrew. And thank you all, and we look forward to partnering more with you soon.
Great. Thank you so much, Jenny. Now let's get into the Q&A. We've received a lot of great questions. So we'll kick things off with a question from Emily from Cheyenne, Wyoming. Andrew, where do you see future retail media budgets coming from?
Yeah, well, that's a great question. So I think that there's been a lot of incremental budget come in the last couple of years. So I would say any future incremental budget will probably get directed disproportionately to retail media. That probably won't last forever. We don't know how long, consumer spending growth, it's going to continue this hot. So that would be the first one that I would point out, though. Then after that, I think, we're going to start to see some national media budgets move. Those tend to move slowly, but they're going to start to move and potentially unlock. I think the way that happens is through more CTV advertising, because then you basically get, a one-to-one shift maybe from some linear TV ad budget into CTV. And then the last piece is that shopper marketing budget. That to me is really the key piece, the big piece, because it's a huge, huge pool of spending. It's a very different form of spending, so it doesn't move maybe as easily. But I do think that as sales migrate to these digital channels, it will start to unlock more and more. It's also why I highlight that offline attribution piece, because when you can start to show that digital ad is driving in-store sales and get a tight feedback loop around that, to me, that's what's going to be a big unlock for those budgets. So I think the future will increasingly be driven by that offline sales piece, but how long it takes to really get there is to be determined.
Interesting. Thanks. This next question comes from Curious from Colorado. He wants to know about digital out-of-home opportunities. What is that growth? Are the same teams managing the online network as the in-store ones, I think pertaining to digital out-of-home?
Yeah, well, so digital out-of-home is often dealt with differently, but I think we're going to see a lot of interesting incarnations of digital media introduced into the store. Walmart's already doing some of that. We're starting to see more digital screens in different parts of the store. So I think we're in the early phases of what will ultimately be a big trend. I think there's still probably a lot to sort out in terms of how those ad buys get executed. How does it integrate into existing platforms? So that's going to take a little time for the mechanics to get worked out and to materialize. But just thinking about the opportunity, delivering high quality ad impressions at the aisle or at the context of when people are ready to make a purchase, very compelling.
Great, thanks. And then this next question is actually for Jenny. Jenny, this comes from Carlo from Charleston. And Carlo would like for you to talk more about Google's role in retail media networks.
Absolutely. How much time do we have? It can be quite extensive depending on what you're looking for. I'll give you kind of some high level, and of course, please do reach out. We can discuss more in detail about your particular media network needs. But what I'll say is, as we're talking about this, at its core, retail media networks are really aiming to harness the power of first-party data. And as we talked about, as you heard from Andrew, that can be quite difficult in terms of gathering that online, offline customer interaction, offering closed loop measurement, and really making sure you are giving that ROI to your supplier funded campaigns in particular, but also for any personalization efforts you're looking to do internally. So Google's role is really to be an enabler in this space. So we have, the tools to help you process and understand that underlying data, and also be able to deploy those ad campaigns through our platforms with advanced capabilities and controls, so that you can make sure that new revenue stream that you are onboarding onto also has a symbiotic relationship, of course, with your core business, and you're being really smart about who you're talking to and when through this type of communication. And again, please do reach out. We'd love to chat more with you, and we'd love to help with whatever your particular media network needs are.
Awesome, thank you. This next question is from Lynn from Las Vegas. Andrew, Lynn is asking, how do you think tensions between retailers and commerce intermediaries, for example, a Kroger versus an Instacart, is going to play out? Both players are ultimately trying to monetize the same traffic with ads, correct?
Yeah, there is some potential for conflict there. And I think this is maybe an age-old debate, is like, what's my traffic versus when you're dealing with a platform like an Instacart, are they bringing in new traffic, incremental traffic? So there's always going to kind of be a little bit of that tension at play. I think, if you talk about a Kroger specifically, maybe a Kroger is big enough to go their own way and ultimately rely on their own traffic. But I think when you're talking about regional grocers and things of that nature, that's still going to continue to be the fuel for an Instacart. I don't know. I can't handicap exactly how it will all play out. But I think this questioner is right to note that that's potentially an issue and something where we may see some changes or shifts in the coming years.
Excellent, thanks. This next question comes from Matt in Minnesota, and I know, Andrew, this is something that you've talked about a lot, particularly when we were talking about our 2022 retail trends. Matt is asking, can you expand on what retail media networks will likely offer for CTV formats? He says, I can only think of Amazon as having a digital TV presence. Are there any others?
Yeah, so Amazon is already kind of talking up that opportunity. So the next way to think about it, Walmart and Trade Desk have partnered. Trade Desk has access to a lot of CTV inventory, so I think you're going to see it happen with DSPs in many respects. So it's going to happen in a lot of cases through partnership. So the retailer owns that data. That data becomes the fuel, but they need to connect into inventory. There's other partnerships, Kroger and Roku. Roku has ad-supported CTV inventory. I think there's others that we haven't seen get into the game yet, like Instacart is one I look at and I say there's going to be a partnership that they will have in the future. Shopify and Roku is another one. So I think there's lots of opportunities for media companies and those that have access to that inventory to connect. Target and Disney's another one. So that's where I would look. I don't think there are a lot that will be able to do it alone. Amazon may be somewhat unique in that regard.
Excellent. Thank you. This next question comes from Nathan from Queens. Nathan is asking, which consumer categories are retail media networks driving the most value for?
So first off, it's working across categories. And if I think about most value, one category we don't talk about often enough in this space is consumer electronics. And I say that because, oftentimes there are high ticket purchases, high consideration, and the category is now more than 50% of sales are happening online. So that's a big one. There's a lot of energy and momentum around consumer packaged goods, both personal care and food and beverage. So I think that's certainly a big area of growth. But yeah, maybe it's the overlooked ones like consumer electronics that I'd pinpoint. Home furnishings is another one because it's a category where you don't have as strong of brands like you do in some other categories. So you think about shopping through Wayfair, for an example. It's really valuable to be able to elevate your brand into the consideration set through sponsored search.
Yeah, absolutely. And I guess we've got time for, I think, one more question here, Andrew. So we'll wrap things up with a question from Bryn from Miami. Bryn is asking, why isn't offline sales attribution further along, and who is in the best position to benefit?
Well, this is a multi-billion-dollar question. So from what I hear, oftentimes it's that, this is a story we've heard from retailers for years now, is that the e-commerce business and the in-store business have been siloed. They're getting better at partnering and integrating, but sometimes that data is just sitting in different silos. So I think bringing it together in a way that it can be brought to bear, it can be a challenge. I think the way that a lot of these campaigns get executed, you have to do third-party matches from the exposure files, then to the sales files. It has to all be anonymized, and that by the time you do all these steps in the process, it just takes time. So you're not getting that real-time feedback loop you can get in a purely digital environment. Sometimes those lags are really too long. You a lot of times hear 4 to 6 week turnarounds. If it can get consistently to 1 week turnarounds, I think that will create a lot of progress. And the ideal is if you can make it automated and fairly instantaneous, where you can get that readout in the next day at least. So I think a lot of these things just need to continue to sync up better. I wish I knew all the mechanics to say, here's the silver bullet to make it happen. I wouldn't expect it to happen overnight, but I am hearing some signs of progress where those time lags are starting to narrow.
Awesome. Well, unfortunately, that's all the time that we have for today. But thanks again to Andrew for joining us, and a very special thanks to Jenny and to the team at Google as well. Our eMarketer production crew behind the scenes also deserves a huge thank you for making this webinar possible. And as promised, we'll be emailing you soon with a link to the slides and a full recording from today. Before we wrap up, let me just take a moment to tell you what's happening across eMarketer's media channels. You can register for upcoming live analyst and tech talk webinars at eMarketer.com/webinars. On the audio side, don't forget to tune into Behind the Numbers, eMarketer's daily podcast at eMarketer.com/podcast. And finally, please check out all of the newsletters that we have to offer as well. Thanks again for joining us and enjoy your weekend.